So one question I get asked a lot is, Varun, how do you open a bank account and how do you do digital payments in India? It's still a mystery for us. And it's actually a fairly simple, straightforward solution today. But let me tell you a story about back in my day. When I first started JobSpy, when I was trying to get a payment gateway, even before JobSpy for the days in Sizer, it was incredibly hard. One of the only companies that were around at that point was CC Avenue. And I remember really running around to get a payment gateway. It was very, very, very hard because the banks were essentially afraid of people selling things online which were illegal. So they did a lot of due diligence, a lot of research. Today, it's much simpler to get a payment gateway. It's, in fact, very, very easy to get a payment gateway in India. So I'm just going to run you through the entire process in this episode. So let's get to it. Okay, so firstly, you need to understand how a business bank account works. And I'm sure this entire video or this entire chapter is going to be covered by Shashank as well, especially when he talks about finance, and it's going to be in depth. But some of you are not going through Shashank's content because you just want to learn the business end. You don't want to become hardcore finance guys. So I'm just going to give you an overview. You don't need to dive into all of this. So business entities have a bank account. Bank accounts have a current account, which is the account you do business with. And the idea is that to take payments, and you can take payments in many ways. Those ways are DD, cash deposit, nobody does that anymore. Credit or debit card, somebody can just swipe their card and the money could come to you. A payment gateway, you can actually integrate a payment gateway in your software, or you can just have a link which comes to you. People can pay you via check, they can pay you via Paytm or one of these apps like Google Pays or Google Pay, or they can do UPI or NEFT, which is something that most of you are familiar with. And if you're not familiar with it, well, it's simply a way to do a bank transfer, usually online. And those are the ways that money comes into your current account, right? Which is the account you do business with. Instant, kind of like instant settlement. So how do you open a corporate bank account? So after you register a company, you will need to pass a resolution. Remember, you have these board meetings, and in the board meetings, you can pass a resolution. So you pass your first resolution to open a bank account with a particular bank. And usually your CA will do this for you, right? So you need the following documents, and I'm not going to run through all the documents, but in general, you need your incorporation, you need the MOA, AOA, you need a PAN card, all of that. So we're not going to go through that. It's right here. And the best startup balance accounts to open, and by the way, we have no tie-ups with any of these guys. These are just the best from my experience. There's ICICI Bank's iStartup. You can click that link. Kotak Neo, you can click that link. Or HDFC SmartUp, you can click that link. In full disclosure, on the India side of payments, we use Axis Bank and we use HDFC Bank. For Avalon, we don't use ICICI Bank, but I've used them in the past. All three of these are fairly similar. And people keep saying, oh, this bank is better, this bank is better. In my experience, they're all very, very, very similar. It really, your experience with the bank and even your rates really depend on who your banking manager is, right? If he's a driven guy, he will be willing to give you a lot more concession. If he's somebody who cares about his job, who wants to progress in his account or wants to progress in his company, he'll work hard to give you the best rates, especially if you have American or clients from abroad. So he'll give you better foreign exchange. You need to work with somebody who really cares about what they do, right? And I've repeated this many times. Don't worry about which is giving you better interest, what the better minimum balance is. All that doesn't matter as much as you think it does. It really doesn't matter, right? So just get started. Don't overthink this bit. What are current accounts? Why are they useful? Current accounts allow for prompt business transactions. So if you get money in today, you can use this money today evening, right? So it's instant. There's no limit on withdrawals. You can drain your entire bank account if you want. There's no limits on deposits, especially in the home branch. It enables businessmen to make, or businesswomen to make direct payments using check, demand draft, or pay orders, right? So you don't have to do any intermediate stuff. And it gives you most current accounts allow you overdraft. So you are allowed to use money that you don't have as long as it comes in time, especially if you have a relationship with the bank and they know you constantly get payments at a particular date, they will sometimes give you overdraft. And we've never used this facility in Avalon, but in JobSpy, we've used overdraft a few times, especially when we were waiting for our funding amount, and we kind of proved that to the bank. So it provides internet banking and mobile banking facilities, which I think you get, with any sort of different accounts. But current accounts, the internet banking and the mobile banking is little better than, especially on the corporate side, than if you're an individual, because banks know that corporates spend a lot more money at the bank than individuals. Right? So the popular payment gateways, and the payment gateway is like a way for a person to just swipe their card and that money comes directly to your bank account through the payment gateway. The payment gateway makes the process simpler, where people can swipe their cards, enter net banking, whatever it is. So in my experience, there's Razorpay, there's CC Avenue, there's Instamojo, there's Paytm, there's PayPal, there's Stripe. Razorpay, I think in my opinion, is the fastest, safest, easiest to integrate, good customer support. Again, we are not affiliated with any of these companies. We just want this to work. CC Avenue is, it's one of the oldest, but we found it expensive. Instamojo creates payment links. That's what they're known for. It's a quick setup. You can get Instamojo up and running quickly. Paytm, in my experience, in the experience of my team, not just now and in the past, the Paytm merchant side is terrible. They have the worst customer support. Try to avoid working with them. PayPal doesn't support Indian merchants selling to India. I don't know if this has changed today, but in the past, if you're an Indian merchant, you can't take money from other Indian merchants. Don't know why. Right? I don't know if this still holds good today, but this was till a few years or months ago, right? And the fees are too high. PayPal will destroy you, because especially if you're taking payments from abroad, PayPal will use the worst currency or the exchange rate possible. They just avoid. Stripe is really good, especially if you're US or a Singapore company. On the Singapore side, we use Stripe. It's the best option. It's a big, stable company. Their customer support is awesome, right? Stripe, I think, is a model company, and, Razorpay seems to be going that way. So these are two companies I recommend you guys work with. So what does the payment flow look like, right? How does the payment gateway work? And you need to know this, right? So suppose the customer selects an item on the merchant's website and clicks on Pay Now. So they've clicked on Pay Now. The customer is sent to the payment page of the payment gateway provider. So they go to an actual page created by Stripe. And Stripe also has this pop-up where it can happen on your page. But in general, the idea is that it happens on another page and you just get a small view. The customer selects his or her payment options. He says, okay, I want UPI or I want net banking or whatever. Then the payment gateway sends the customer and payment details to the right bank, right? So it reroutes the person to the right bank. The bank verifies whether the customer and the transaction are successful or failed. And a transaction can fail if the person doesn't have enough money, if the security options on that person's account are too high. There are many reasons why a payment could fail. We're not going into that. But the bank essentially verifies whether the customer and transaction are successful or failed. The payment gateway passes the customer back to the merchant's website along with the transaction status. So basically, a Stripe or a Razorpay, all they do at the ending is to send the person or the customer back to your website and say either thumbs up or thumbs down, right? Which is either transaction succeeded or it failed. Then the customer is either shown a successful page or a failure page, and with the success page, the website places the order. And that part, the last two parts, it's called a callback. That's CALLBACK, right? So when your developer is integrating a payment gateway, he or she is going to use the word callback to denote when Razorpay or Stripe or Instamojo or whatever has sent you back and said, hey, that's a success or a failure, right? One last topic that I want to quickly touch before we end this, and Shashank's going to go in depth with this, but I'm just going to tell you the general idea behind GST. As you know, GST is goods and services tax. The idea is simple, right? If somebody makes flour, right? Somebody's making flour and maybe that same manufacturing plant is making sugar, right? So flour, like atta. And, then that person sells the flour and sugar to another company. Then the other company, takes the flour and sugar, does something together and makes biscuits. Then puts it off to another company. Then maybe another company adds a label onto the biscuit, right? And then maybe, after some other steps, something else gets added, maybe packaging. The idea is that at every stage, the government's charging some tax, right? But what's happening here is you understand that there's a lot of, if the government taxes at every level, which is that they tax flour and sugar, and then they tax the guy doing the biscuits, and then they tax the guys doing the labels, it doesn't make sense, right? Because this tax is actually cascading. So government has triple taxed the guy or the person who's doing the label, right? Because that person has had to pay the tax for the biscuits as well as the flour and sugar, because everyone's going to add their own markup, right? So the idea is because there's this cascading tax, because people, manufacturers, when they make stuff, they pay for raw materials. GST prevents that. So every time there's some sort of value addition, only that is taxable. Right? So it's a good idea, and you'll get the hang of it, especially if you watch some more videos on GST, and I'm going to put another video by ClearTax on GST, so you get an idea. So I'm going to put a video about GST, which you can look at. It's not by us, but it's a good explanation, and it's just an overview, right? Whereas with Shashank's content, he goes in depth, which is why I'm not going through this. I'm not a finance expert. So GST is split into three parts. There's the state GST, there's the central GST, and there's the integrated GST, which we're not going to go through any of these. It just means that GST is broken up into three components. Usually you'll just see the first two, which is SGST and CGST. All right. So one last thing I want to talk about is international transactions. So when you're exporting services to other countries, you're actually making the rupee stronger, because you are exporting. When you export, you make your own currency stronger. When you import, you make your currency weaker, right? So when you export services to other countries, it is not taxed as long as you have something called a letter of undertaking, which is an LUT, right? And here's the steps for an LUT. But the idea is that if you're selling services to, say, US or Singapore, and you have an Indian company, you can take advantage of LUT to not pay any tax whatsoever, because you are making your currency stronger. You're helping the country. So again, here are the instructions. You can just copy paste it. I'm not going to run through it. But that's that for opening a bank account, and some of the terms or some of the things that you have to watch out for. There are actually, in reality, there are many things to watch out for. But this section is about business, right? And I'm only going to talk about the things that affect, me as somebody who's CEO, or you as somebody who's either CEO or CTO, or somebody who's not specifically working on the accounts. If you're specifically working on the accounts, you should go and watch Shashank's finance content, because he goes into depth about all of this, including taxation, what are the different taxation brackets. He's magical when it comes to finance, right? I would be dead by now without him. So make sure you look at that content if you're interested in finance, but otherwise this should be it, or this should be enough for you to understand the basics of banking for a startup. All right, so that's it for this episode. Catch you on the next.